Welcome back, everybody, to Altcoin Daily. My name's Austin. Over $1.48 billion in Bitcoin options expire on Friday. Let's talk about what this means for crypto and what this means to you and me as investors. And it is important to understand that this over $335 million in short liquidations, the short squeeze, which started the Bitcoin rally earlier this month, this price spike, because it's in the same month, now affects the billions of dollars that are about to expire. You see, options expiring, especially of this magnitude, doesn't necessarily mean that the Bitcoin price is about to crash, nor does it mean that the Bitcoin price is about to pump. It just means expect volatility in either direction. Because what an option allows an investor to do is, at the end of the month when it expires, it gives those traders the option to either call or put, meaning either buy or sell the asset. And we often see traders playing trader games, manipulating the price into that expiry to try and get the best outcome for the trade that they placed. So let's go over expectations. And there is good news. The 36% year-to-date gain for Bitcoin has caused bears to be ill-prepared for the $1.48 billion monthly options expiry tomorrow. So because Bitcoin has been trading above $20,000 since mid-January, which, by the way, was extremely bullish beginning of the month, almost unheard of we'd be this high the beginning of January when many of these people placed their bets. This explains why these billions of dollars in monthly options expiry will vastly benefit bulls, despite the recent failure to break above 23,200 resistance. And let's get specific, because right now, the call to put ratio, meaning the buyers to sellers ratio, is 1.15 in favor of the calls, the bulls. And a broader view using the 1.15 call to put ratio shows more bullish bets because the call buy open interest stands at 790 million against the just 680 million put sell options. Nevertheless, despite the millions in puts, most bearish bets will likely become worthless as Bitcoin is up 36% in January. Hooray! Bears continue to get crushed because of this recent Bitcoin price pump. And what specifically is the price that we have to maintain for the bears to lose tomorrow? Well, if Bitcoin's price remains above $22,000 at the opening of the markets on January 27th, only $38 million worth of these sell options will be available. And the reason that this happens is because there's really no use in the right to sell Bitcoin between 21 and 22,000 if it trades higher on expiry. And again, this is why you sort of see price manipulation in either direction into that contract expiration. Bears are trying to suppress the price to win their bets. Bulls are trying to elate the price to support their bets. What you should be prepared for tomorrow below are the four most likely scenarios based on the current price action. Worst case, if the price falls to somewhere between $20,000 and $21,000 Bitcoin, here are the calls, here are the puts, way more calls. The net result favors bulls by over $115 million. If the Bitcoin price begins tomorrow between $21,000 and $22,000, the net result favors the bulls by even more, $320 million. If BTC ranges between $22,000 and $23,000, the bulls remain in control, profiting over $455 million. And if we maintain the pump and BTC falls between $23,000 and $24,000, we get all calls, zero puts, and bulls completely dominate the expiry, racking up over $595 million. So for this month, for this expiry, this looks good. And it's not always like this. The four most likely scenarios don't always favor the bulls, like this month. But essentially, the only way the bears could get a little win, Bitcoin bears would need to push the price below $21,000 by tomorrow to greatly reduce their losses. However, most Bitcoin bears recently got wrecked, got liquidated, hundreds of millions of short positions wrecked, which means they don't have that much money, that much power right now to exert a lot of force. And in summation, the most probable scenario for the January monthly BTC option expiry is the 22,000 or higher level, providing a decent win for bulls. Every month, I'm going to keep you informed on these metrics so you have all the information you need every month as an investor. Now, of course, zooming out big picture, the next cryptocurrency bull run, whenever that happens, could be catalyzed by favorable regulation from the US. Now, Congressman French Hill, who is the chair of the newly formed House Financial Services Subcommittee, is seeking one thing: to set new rules for the crypto industry. Here's a 90-second clip of CNBC host Joe Kernan grilling this congressman, asking when we can get a framework so there's some regulatory clarity so crypto can thrive in the US. Also, pay attention to the second question where he asks, how likely is a Bitcoin spot ETF this year? And then, does Gary Gensler need to be fired from the SEC for crypto to truly thrive?
But we want to make sure that America is the place for innovation in fintech, and blockchain and distributed ledger technology is part of that fintech future.
Well, it has real consequences to not have a framework in place. And, you know, I'm not saying that Sam Bankman-Fried didn't bring it on himself, but we certainly enabled some of that to be offshore. And I mean, it's going to help. It's going to help the industry, and it's going to help the technology if Congress could get its act together. Do you think there should be a spot Bitcoin fund? That's not going anywhere now either.
Yeah, so that's what we want to explore with this Digital Assets Committee. I think you'll see us look at a privacy law, a federal privacy law. I think you'll see us consider a stablecoin bill that we made progress on in the last Congress with work from our leader, Patrick McHenry, on the committee, and then Chair Maxine Waters. I think you'll see us explore what are the ramifications for the securities market, and work with the Agriculture Committee in the House and Senate on the commodity aspect of it, trading the coins and running, how should the exchanges be overseen. All that's on the table, and all that's going to be a priority for this year.
You can't really tell the SEC what to do, can you? I mean, that's going to be as long as Gary Gensler's there. Do you see any progress really being made?
Well, Chair Gensler says he was the cop on the beat last year. Gary Gensler also says that he's an expert in this area because he taught it in graduate school, blockchain and distributed ledger technology. So we'll invite him up to Congress to tell us what he knows and what he recommends in this area and what he was doing last year when we had so many challenges for our investors and our consumers.
Now, something that lawmakers and retail investors alike are seeing as a negative: Binance USD stablecoin sees a $2 billion reduction in a month amid token mismanagement. So BUSD's circulating supply fell to 15.4 billion on Wednesday, paring down $1 billion over the past week and $2 billion down in a month, according to the public information on CoinGecko. And the reason we're seeing this decline, in large part, a lack of confidence in BUSD. The latest drop extended BUSD's decline from 22 billion in early December, when anxious users scrambled to withdraw funds from Binance after it botched a report about its digital asset reserves. So some irregularities in the paperwork, which is never a positive sign. Also, earlier this month, blockchain research firm Chainargos found that Binance pegged BUSD was not always fully backed by reserves during 2020 and 2021. Binance admitted this, they acknowledged the breach and said that it has fixed them. And then this week, Bloomberg reported that the exchange mixed customer funds from the collateral of the Binance-pegged tokens. So again, this sort of explains the reason that people are pulling their money out of Binance's stablecoin. And then also, in a blow for retail traders, Binance's banking partner, Signature Bank, will halt transfers smaller than $100,000 using the Swift interbank messaging system starting February 1st. So again, retail traders are sort of leaving because, big players can still make their transfers, but the smaller minnows cannot. Now, it is worth noting that if you look at Tether in purple, USDC in bluish, and BUSD in grayish, BUSD is still the third most popular stablecoin globally, which is significant. And even though I guess it's owned by Binance, BUSD is a dollar-pegged stablecoin issued by the New York-based fintech firm Paxos Trust under the Binance brand, backed by cash and U.S. Treasury bill reserves. I encourage you to give me your thoughts on this token mismanagement, your thoughts in general on BUSD down below. That is the video. My name's Austin. Like always, see you tomorrow.